Wonderful good day, ladies and gentlemen. Commodity TV out of Munich today, out of our studios. And I have again the pleasure here. I have with me Greg Pendura. He's the president and CEO of Solid Resources. We interviewed him in August already, shortly in Vancouver. And now he's here in Germany and Switzerland on roadshow. And he gave us the opportunity again to talk to him. Greg, thank you very much for taking the time to talk to us again. And I said it already, we interviewed you in August about Solid, but just give us a brief idea. Solid is working in Spain. You're a Canadian company. Why Spain? How did you come on that? What do you like in Spain?
Well, Johan, we've been in Spain for 12 years already. We've been working on our initial property there, which was the tin tantalum lithium property. And we've had 4 drill programs there and had many good years there in developing relationships with the regulatory authorities, the mining authorities, and Solid Resources is well respected in Spain as a junior mining company. And now we've got an iron ore concession, and our life in Spain just continues. We're very happy being there.
Mm-hmm. And how do you find it these days to work in Spain? Because maybe some people may say, wow, Spain is bankrupt and all the problems in the European Union. What is your experience about Spain?
Well, right now, actually, Spain is a great opportunity for us. As everyone knows, Spain is economically not well right now. And the new government, which is a conservative government, is very, very pro-business. Mm-hmm. And
so they support you?
They support us very much. Because we do what we say we do. They're giving us subsidies to move forward on our projects, which is very, very beneficial for us. Mm-hmm. But Spain is very, very proactive on the mining side. They're going to assist us to fast track both projects over to the project level, and we're very happy with what's going on right now.
Mm-hmm. Great. So let's dive into your 2 projects. You have on the one hand tin, tantalum and lithium, and on the other hand you have iron ore. I would like to start first with the tin tantalum, because to me, I don't know any tin tantalum production here yet in Europe, right? And the market is dominated by the Chinese. So give us a short overview about this project, please.
Well, we started to try to find a tantalum project 12 years ago because we knew that tantalum was going to be a very critical metal as we move forward in the future. And it is. Mm-hmm. Anything to do with electronics needs tantalum for capacitors. So the future for tantalum is very, very rosy, mm-hmm. and the more electronics there are, the greater the need for tantalum. Mm-hmm. Plus, there's a real supply issue now. We have problems with the Chinese controlling the output of tantalum. We've got problems with the conflict minerals, which mm-hmm. people may have heard of from the Congo, where a lot of tantalum comes from. There is
like child work, slavery, and all that stuff.
Child slavery. It's atrocious how they produce the minerals there. So there is a lot of regulation in the Western world to restrict the use of tantalum from the Congo. So to have a supply source of tantalum in the EU, especially in Spain, is strategically exceedingly important.
Mm-hmm, mm-hmm, absolutely. Yeah, and I think also when you're in Spain, you have rules and regulations which are clear. It's European law, European Union, and it's not like somewhere in Africa or South America where you're sometimes not sure if they change it tomorrow.
No, exactly. And people have to appreciate that the end users of tantalum are your Fortune 500 companies. Mm-hmm. They're your IBMs, your Microsofts, your Sony, your Samsung. These companies cannot afford to be associated with a product which they're purchasing from a conflict area. Absolutely. So they are very, very careful to ensure that the tantalum which they are using is coming from conflict-free zones. So for us to produce tantalum in Spain is very, very, very good.
Mm-hmm. Did you receive any interest so far? Because we are in Germany, and there's a company called HC Stark, which I know also, and I think they are one of the real large tantalum processors, or let's call it operators. Did you receive any interest so far in your project for a joint venture for whatever?
Yeah. We can't say specific names,
of course.
But the tantalum world is very, very small when it comes to the processors and distributors. Mm-hmm. HC Stark being one of those. Yes, we have talked to HC Stark. Mm-hmm. We've talked to other people in the tantalum business, and there is we're in discussions now on how we can move together in some relationship as we move forward with that project.
What would be a possible capex for this project? Because we know from gold and silver, sometimes we talk about 500 million or a billion or whatever. In the potash area, we are easily up to 2 or 3 billion. What is the capex for a tantalum tin lithium production, like you have it?
Right. The project we have in Spain, the capex is only going to be 25 million, which is very, very low. Correct.
That's nothing.
It's a 1,500. It will be a 1,500 ton per day operation, and yeah, that's one of the benefits that we have with that project. Is the low capex going in. The infrastructure in that area is phenomenal. We're right on a highway. There's rail there. The port is right there. Water and hydro are on site. So there's no infrastructure cost. So hence our capex is very low. Our internal rate of return is, I can say it's in the low 40% area right now, which is exceptional for a mining venture. So in all indications, we have a very economically viable project here.
Wow, that sounds really, really interesting. How long would it take to bring it into production? What do you think?
Being conservative, we'll say 24 months. We're just going to be applying for or submitting for our mining permit in October of this year. Once that process starts, we can look at about a 24-month window.
Okay, so let's come to your second project, iron ore, which I also like. Iron ore is the most traded metal in the world. I think it's the second heavily traded commodity in the world after oil. Yeah.
Yes.
And so you have also an iron ore project with 62 concessions, I think.
Yes.
And yeah, elaborate a bit on the project, what's going on there, and how big it is. Have you already proven resources reserves on that?
Sure.
That would be great.
That project is in southeastern Spain, in a province of Murcia. We're very happy with this particular project. It's a former producing iron ore mine from the 1970s and 1980s. It was once controlled by the largest Spanish conglomerate of that time, and they were using the iron ore from that particular concession for their steel mills in northern Spain. So there's proven this historical data there on both geology and on production, which we've been fortunate enough to acquire. We've put all this into a digital format. We've done our 3D modeling. We're making all the information 43101 compliant, which is simply a term for you got to follow things in a certain procedure these days in order for us to see what kind of reserves that we have. So that's been done. We've got great interest on that project from other large iron ore companies to be joint venture partners with us.
Yeah. So something in the loop there?
Something is in the loop there. It's more than in the loop. I believe we're in the final stages of completing a agreement with one of the companies that we have selected. And one of the reasons for the interest there is because the grade of the iron ore there is very high. It's 65%. The impurities are very, very low. It's considered a premium grade iron ore, and because of that, a lot of it will be sold within the European Union.
So saves a lot of transport costs?
Phenomenal amount. Transport costs from Spain to China at a minimum would be $25, $27 a ton. We'll save at least half of that if we distribute that product in the EU, and that goes right to the bottom line.
But if you also, I understand you right, because for iron ore you need also a lot of infrastructure, like for the other project, yeah? But that's also all there. You have a deep sea port, I think, nearby?
Exactly. Yeah. We have the deep sea port of Cartagena, 100 kilometers from site. It's a phenomenal facility. It can handle up to 400,000 ton vessels. We have a rail spur 8 kilometers from the mine site leading right into the port of Cartagena.
That's all there?
All there. Wow. We have a toll-free highway right there beside us. And again, water and hydro is on site. We have competing hydro companies, so we'll get very attractive hydro rates. So again, the infrastructure here is as good as the tantalum property. It's exceptional.
Yeah, this saves you, of course, a lot of money. What would the capex then be for this project?
The capex on this one is also for an iron ore project exceedingly low. It's $60 million. That's for a million ton per year operation. In all likelihood, what we've learned to date, it will be larger than that.
Yeah.
But for a million ton per year operation, the market cap is, or the market capitalization, the capex on that, sorry,
Yeah.
will be $60 million.
Yes, okay, great. Do you have an estimate or a guess what the production costs would be, like FOB to Cartagena to the port per ton of iron ore? You already made some calculations?
Yeah, we've made with our, I'll say our potential joint venture partner, we've already made detailed calculations on that. The actual production costs are going to be in the area of, in the low 30s dollars per ton, which is very low. Our logistics cost to transport from mine site to the port, so it's FOB, the cost will be $20. So around the low $50 per ton mark is going to be our all-in costs, FOB costs. So, I mean, this particular iron ore is a premium, so it'll be a $15 to $20 per ton premium to what the going price is. So nowadays the price is around 135, we'll say. So if we get 150 per ton on today's prices, and our costs are $53 per ton.
It's a pretty nice margin, I would say.
It's a pretty nice margin, pretty nice margin.
Even pre-tax, it's pretty nice
Hence
margin.
all the interest from our JV partners. I mean, there's a lot of interest in this project.
Great. So let's talk about some numbers. How will you finance it then? Okay, let's assume you have the joint venture partner, all works. How will it be done then for our viewers to understand? Because you are a small company, you get maybe a big company on board, and for a small company, even $60 million is a lot of money.
Yeah.
So you have any plans elaborated already? How you want to do that?
Yeah, our plans in place, as soon as we announce our JV agreement here, which will be in October, our first project will be to do a work project on that particular project to make the prior data 43-101 compliant, plus get a better handle on the reserves to do some deep drilling on the project. But the funding, to answer your question, the JV partnership isn't just the offtake agreement. It's an actual equity partnership. Solid Resources will be the majority shareholder. Our partner will be a minority shareholder. But from when we sign the agreement, whatever that percentage of equity participation is, they are responsible for contributing the capital to the project for that, whether it be for exploration or capital equipment. And they will bring to the table their financial network to assist Solid raising their part of the funds for the project.
Okay. Yeah, and of course you can also go to companies like whatever, Atlas Copco, Kyocera, Caterpillar, whatever, they do equipment leases and things like this. So that's all in the loop already, right?
It's all in the loop. This first project will get us to a pre-feasibility stage. Once we're there, our options for future capital are going to be varied, from project financing to some debt structuring, whatever. Raising a $60 million capex for a project of this size and profitability will not be a difficult
Shouldn't be
thing.
the issue.
No.
Yeah, that's right. What is management share in the company?
Management and insiders, we share about 22% of the company.
That's a lot. So you sit in the same boat.
We sit in the same boat, and management is very motivated to make this project happy. Our whole mission is to increase shareholder value, and we've tried to do that from day one, and we will continue to do that.
Great. So that means in the future we want to pay some dividends, maybe also.
There's a good chance of that. I mean, it'll be a very profitable venture. And the best way to pay back the shareholders is on a dividend.
Wonderful. I think that's a great final statement. Thank you very much. Greg, I think we will watch you carefully. As you said something which came to my ear, you said in October you will already say that the joint venture will be there. So we have to watch you carefully.
Yes, you do that.
Even if it would be November, it would be okay. We keep fingers crossed for you.
But I said October.
Yeah, that's right. We take you on that. Okay. No, thank you very much. Very compelling story. I think very interesting. And of course, you're doing for Spain a big favor then, because you will create jobs in addition.
Absolutely.
And right jurisdiction, right metals.
Absolutely.
Great. Thank you very much, Greg.
Thank you, Johan.
Thank you. Thank you. Yeah, ladies and gentlemen, you heard it. That was Greg Pendura, the President and CEO of Solid Resources. watch out for the company. The company is the first time here in Europe. They were very quiet the last years because first they said, hey, we do our homework and then we tell the story. Now they are out, they want to tell their story, and I think iron ore is always needed, especially also in Europe. And in addition with tin and tantalum, especially tin is a market which is very, very small, but highly needed for iPhones, for laptops, for computers, for whatever you can imagine where you have to solder something. And what we know from our research is that we have only 6 major tin mines in the world, but 3 of them are exploited the next 2 to 3 years. So supply-demand balance is in an imbalance, of course in a favorite for rising prices. So watch out for Solid Resources, make your due diligence, and watch Commodity TV. Thanks and bye-bye.